I look forward to speaking at Might Speak. It's it's been a journey, and we look forward to meeting and engaging with all the people that will be coming for that event. There were other things which were not so present in people's minds, but at least were of concern to me. In the banking sector, it wasn't so much the strength of the banks. That wasn't the concern. The concern for me, at least at the time, was the liquidity management, which didn't look appropriate or needed to be strengthened in various ways, and we could deal with that at a later.
When you say liquidity management, what do you mean exactly?
First, banks were there has always been a certain let's say segmentation in the liquidity market. So some banks flush in cash in liquidity, and others the big ones. But I don't like the word big. There's just a certain character. It's not bigness that or size is not what really defines them, in my view. But and then you have other banks that, for whatever reason, are kind of starved. There are historical reasons for some of them. I mean, for instance, why does the government pay or TSC payments are done through particular banks? Or why does I don't know, payments, for instance, or tea farmers or whatever, or milk farmers, why do they go through specific banks? We began to deal with them in a sort of a structured way. And the most pressing thing then was inflation. That is front and center of our mandate. And so we increased interest rates and did other things like put in a new instrument, expanding the TAD, the term auction deposits that, in a sense, to try and extract liquidity from the system. In any event, we did other things as well, but I think an important element there was done also at the same time was on the exchange rate. We are completely wedded to the flexible exchange rate regime. So we fully believe in the flexible exchange rate regime. We are wedded to the flexible exchange rate regime, meaning it's completely flexible. The exchange rate can move depending on the market forces. The only thing we are concerned about is volatility. So the rapid movement, either up or down, is a concern to us. Yeah, I guess one of the things that has come out also is that there was a lot of market indiscipline in the FX market. And that was driving some of the negative expectations on the shilling. If any bank analyst takes a sort of makes such a statement, well, that has to be the bank's position. So analysts and banks are one and the same. Taking action that positively influenced the macro indicators in terms of price, in terms of the inflation, in terms of the current account and all that. I think all those were helpful. So now inflation has come down. It's at 5.3 last month. And also the expectations on that are much more muted, that they are now anchored. Current account has also come down.
Isn't that really an oil story?
It's not just an oil story.
It is more behind that than
there's oil accounts for, I don't remember now, but something in the order of 3.4% of GDP, somewhere in that region. Which is but I think the point is that yes, the lower price of oil has helped. There's no doubt about that, and we have talked about this quite a bit. But I think the other positive developments, their exports have been strengthening, some specific exports. I mean, tea to begin with, not because of volumes, but more because of price. And hopefully volumes will also pick up. Horticultures have also been strengthening, quite strong. Yes, we did overcome this minimum residual limits or whatever it was, or maximum, I don't know if it's minimum, but residual limits. This is exports to, I believe, the European markets. The other things as well in terms of the tourism, which was completely dead a year ago. I mean, a little more than a year ago, and last year did begin to pick up a little, and you can already see some sort of green shoots in
Yes.
that area. And the other things as well. By the way, you also do have the heavy imports of related to the SGR, the
Yes,
Standard
yes.
Gauge Railroad, which is something like a bit more than 1% of
That's all
GDP.
construction was a big
Exactly.
positive component.
But anyway, so you have that, but I think the point you are making is everything is a improvement in the current account or due to oil, the positive oil story? And the answer to us is no. Of course, there has been improvement from that. But be that as it may, the current account has narrowed, and that is obviously positive for the economy as a whole and the exchange rate. There were issues, as you know, in terms of it was labeled the cash crunch.
Yes.
And I'm talking of the fiscal
Yes.
side of
I
things.
had an interpretation on that.
Well, okay, we could hear your
Can I try
interpretation.
it?
You can tell your viewers. I'm
Yes,
sure
well,
they're
I don't know
delighted to know
whether
you.
I'm right or wrong. My impression was that the government had basically were looking to borrow, I think it was about 224 billion from the domestic bond market. If I remember correctly, at that time, there were a lot of offers rejected. And I think there was essentially a lot of redemptions happened, because that's what I saw happening. And I thought that created a turnaround in the government's books, where they'd expected to raise 61 billion. They ended up redeeming about 40 billion, creating a 100 billion shilling swing. Was that correct?
I will have a slightly different analysis of this. The domestic borrowing requirement was 221
Right,
billion
for the full year.
for the full year. And this is, of course, paced through the year. And it follows.